Thanks, Gary. Brokers and investors, always the optimists. They make the sales, negotiate the leases, write the pro formas, then they turn them over to the property managers. We're the ones expected to make the numbers work. Investors expect to increase their returns. There are only two ways to get it: raise rents or cut costs. Talk about your market quest. Costs continue to go up. Total operating costs before taxes have increased 46% from 1994 to 2007. Add to this the property tax confusion. Yes, there is uncertainty, but business property in all likelihood will be taxed at present or increased levels. What is 100% certain is that the cost of owning commercial real estate will continue to increase. Rents remain flat. Rents can't be pushed much higher in this market because of modest demand and considerable competition between properties for tenants. But there's nothing to put a cork on the rising costs of maintaining a building. Costs up and rents flat puts a lot of pressure on managers of property to preserve, let alone increase the NOI. We can't control the market for rent, so we have to find ways to control costs while continuing to maintain or even increase our tenant base. The role of the property manager continues to change. In the early 1990s, managers focused solely on operational issues. Typical calls for help centered on maintenance. No more. The entrance of Wall Street into commercial real estate changed all that. Whether the lights remain on consumes only a fraction of our time and effort. Investors expect managers to have a thorough understanding of the assets they manage, including cash flows, internal rates of return, and other types of investment analysis. One consequence, a significant number of people entering the real estate field today come from the financial industry. A financial understanding is very important, but the two greatest areas of importance for managers are helping to gain new tenants and retaining existing tenants. Savvy owners continue to invest in amenities and upgrades. Tenants expect to work in space that supports their work and their lifestyles. With everyone pressed for time, leaving the office complex for coffee or a meal is viewed as a waste of time. Most office buildings or parks offer food service within a block of walking distance for their tenants. People don't have the time to walk a block for their morning double espressos and their afternoon raspberry mocha lattes. They also expect fitness rooms well equipped for building strong muscles and strong hearts. Medical evidence continues to find a positive correlation between physical health and mental acuity. Tenants want alert, sharp employees, qualities which can be facilitated by treadmills, rowing machines, resistance machines, and free weights. I mean, where do you think I got these rock hard abs? Thank you. Pressure for more amenities and upgrades has been increasing over the past several years. Pressure to build green is a more recent trend. Results of a recent survey provide some clues as to what's happening. 81% of the 392 respondents agreed that a green portfolio was a priority. 64% allocated dollars to implement green measures or programs in 2007. 47% plan to spend more on green initiatives in 2008. Wrote one respondent, "There is much that can be done at little or no increased cost." Almost 50% added educational programs for tenants and building personnel on green programs and projects during 2007. LEED certification grows in importance to tenants, investors, and property managers. While the vast majority of respondents reported that their buildings or portfolios were not yet certified, nearly 86% reported beginning the certification process. Good news. 29% of the respondents report lease rates were higher in green buildings. 56% reported maintaining a green asset as no more expensive than maintaining a traditional property. Energy savings help reduce the cost differences between green and non-green buildings. Like a great deal of trends, the green initiatives have started on the coast and are working their way to the Midwest. Predictions. Number one, the cost of commercial property ownership will continue to rise, putting more and more pressure on managers to manage assets profitably. Number two, upgrades and work lifestyle supported amenities will be expected, I suspect even expanded. And number three, pressure to go green will increase. Ah, the challenges that make property management fun. Thank you.